From the floor of the CME Group, this is Danny Riley, and today's Cash Close. And the name of this video, traders, the S&P 500 futures and the short squeeze pain game. The high of the day in the S&P came in at 2104 even recently. The low came in at 2087.75 early, and last, we're 2103 even. We're up two handles on the day. Total volume, 1.2 million minis trade, maybe 1.25 million minis trade, and 2.4 thousand big S&Ps trade in the pit. MOC, it was lingering between like 150 million to 75 million for sale on the MIM, and the actual MOC came out sell 350 million. Now, tomorrow's the last trading day of July, and it starts out with the employment cost number, the Chicago PMI, and the consumer sentiment number. Now, first I want to ask you guys, look, who's winning in all this mess? I don't think your average trader is making a lot of money when the markets swing the way they've been doing that. And at the end of the day, after seeing the S&P run those downside stops today, and then run those buy stops above 2,100 in the S&P, I'll tell you who I think's winning, and I think the robots are winning in this game. Now, let's talk overall price action in the S&P. Again, I think what's going on here is the same old thing, you guys. Get everybody excited on the downside. In comes the PPT in their form of zero borrowing costs and quantitative easing going on in Europe. And to tell you the truth, the Greek thing floats past, and now I think, at least for the short term, the Chinese problem is not really so much on everybody's radar. I'll say that. Is it a risk to the market? Sure it is, but I don't think it's all that much of a risk in the currents where we're at currently. Now, the other part that I want to talk about real quick is yesterday's two-day Fed meeting and their announcement, or lack of announcement. I mean, the Fed stayed completely mum about what they're going to be doing in the end of the year, and there's supposed rate hike in September. Now, MrTopStep's still in that camp that there's going to be no rate hike in September. And there's not going to be a rate hike in December either. We think that the Fed is kind of stuck with this kind of stuff that's going on right now globally, and I think one of the first things would be China, and the other part would be the gigantic liquidation going on in commodities such as crude oil, gold. Everything's getting hit. The grains are getting hit. Everything across the board is being liquidated. And that doesn't bode well for growth, global growth. Now, as far as the other part about this, and I'm going to conclude this real quick, is as the week has gone on, so has the volume. It's starting to taper as we go into the end of the week. And I think that coincides with kind of the trade that we're seeing right now, kind of thin to win on the upside type trade. But at the end of the day, traders, I want to tell you the same thing that I've been telling you for a long time. The S&P is not going down sharply, and the S&P is not going up sharply. I still do believe that the risk is to the upside, but I don't want to be getting long in any rallies above 2,100, at least not right now. We'll leave it like that, and we'll see you tomorrow on the opening print.